Thank goodness some things don't change, right? All right. All right. A nice little rotation there against our 74, coming back up here to our pivot area. Again, if anybody, we will repeat the levels in the chat. We'll bring those up here in a little bit. He's probably just still getting out of his 74s. That's why he hasn't put them up here. All right, nice little rotation there against the 74. Now we're going to be kind of just flat here now. See where we want to go next. Next level of resistance on the upside is up here at the 90 area. Oh, there they are. There are the levels there for you in the chat. Thanks there, Don. Happy New Year. All right, let's see here if we have any other numbers coming out this morning. 2023, started a new year. Let's see. Well, we do have Chicago the PMI manufacturing index, not the Chicago one. The Chicago one came out on Friday. We have a regular PMI here, manufacturing index coming out here at 8:45, so in about 8 minutes. We got a little number coming out, and then we have construction spending coming out at the top of the hour at 9 o'clock, and also obviously this week on Friday is going to be unemployment number, which is what everybody kind of looks at still, so we'll see what happens there. As we come back here and we're hanging around our pivot area, kind of flat. Has a nice little rotation there against our 74 area on the first support level, as you can see in the chat there. If anybody has any questions, feel free to ask in the chat. We don't mind questions. We are looking for questions to help you explain things to you, look at what we're trying to do here. Again, we're looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities. So the combination of both of those gives us our trading setups. And we do this on an everyday basis, and we keep our risk exposure relatively low. I mean, obviously, when there's more volatility in the market, we are going to have to expand our risk exposure a little bit to take into consideration the volatility in the market. All right. So we do have a number coming out here in about 6 minutes. Be mindful of that. See, with inflation peaking at 9.1% in June, a recession is now the number one economic concern going into 2023. When businesses make less money due to lower consumer spending triggered by dwindling reserves, price pressures, aggressive Fed, companies lay off workers, more people are hesitant to spend, weak expectations of prior over investing also factors into the equation, with many firms feeling the large swath of the economy could or is already experiencing worsening macro forces and a series of unknown variables like the war, the pandemic, the energy prices, etc. Many corporations haven't slashed their profits forecast, while hiring remains surprisingly robust, and the unemployment rate is sitting at near historical lows at 3.7%. If that resilience holds up, inflation continues to cool down, a soft landing could be in the making. The Fed also won't hike interest rates to the moon, which has begun to take off its foot off the accelerator, which could mean that somewhat of a slowdown is in store, but not one that slams the brakes on the economy. All right, we come up here now to the 90 area as we were chit-chatting away there. Got a little bit there above the 90, coming right back down here a little bit. Again, keeping your stops in place. And again, if you got up there to 2.5, and if you still have them and you don't like the price action, you can obviously give you a chance there to scratch a couple of them if you still have them while you had them. Now they kind of ran through back up here. Again, keep your stops in place, and also make sure, if you don't like the price action when you got up there and came back down, you had a chance to scratch some of them. There's no reason to love a trade, especially if you don't like the price action. As we continue to uptick, coming up here to the 98 area now. And nice little, trying to give us a little rotation. And that's why you get out of the bad one, so that you can have the ability to get into the good one. And a nice little rotation there off of the 98 area. Trying to, anyway. And, who knows? Maybe they got a leak on the number, right? And that's why you're getting this volatility. We don't like to trade a number, for sure. There's one reason, because maybe they leaked the thing. So who knows? But we're trying to get a little rotation here against our 98 area. Again, giving you a chance to do the same thing we talked about at 90, giving you a chance here to exit some of it for a scratch if you don't like the price action. All right, we're just kind of hanging up here, working this 98 again. If you don't like the price action, you could have got out for a little bit. You have choices. You don't have to love a trade if you don't like the price action. So there's a difference here. Depending on a trade, and then obviously looking at the price action to help you with your decision as to how you handle it, manage it. Okay, everything that we talk about, that I'm talking about, is taught in our education course that we offer. So we try to adapt your risk tolerance so that you can maximize profits for yourself. and also try to look at the price section and try to help you with those decisions. And then again, everybody here has different risk tolerances, so not everybody here trades the same way. I think we can all understand that. Well, if you don't, then we should, because everybody, I've been standing around a lot of great traders, and I can tell you one thing: I couldn't do some of the things that some of these guys do. So, all right, just coming right down here, back here to 98, giving you another chance to get out of some here if you don't like the price action. If you want to hold on to some, maybe lighten the load, depending if you're trading multiple contracts or not. It's always an option, right? Always an option. As trying to rotate down here for us a little bit. All right. There we go. All right. Let's see if we can get a little bit more out of this thing there. All right. All right. Nice little rotation there against the 98. Obviously, you have to work that one a little bit. They're not always, as good as the 74 below. And then the 90 obviously got run over a little bit. And again, that's why you get out of the trade and get back into the better trade, or the trade that gets you the winner. So, and that way you don't have to worry about what am I going to do with the 90s when I still have, I'm not going to get into 98. You get into that whole big spiel. All right, we have a number coming out here now. Again, they could have leaked that number. We like to be flat here when the number comes out. So, I don't know why. I don't know why they popped it there, but they could have leaked that number out here a little bit. As the number is out now, as you can see, the volatility jammed back in here in the market. Again, coming right back up there down to our pivot players, getting paid off here a little bit. If you are a little aggressive, nice little quick rotation there against our pivot area, and then quickly, you gotta take your profits. Otherwise, look what happens, right? Just flipping around really fast. So again, we are flat when the number comes out. We don't have anything on right now, and well, obviously seems a little bit bearish, but all we did was come back down here to our pivot. It's basically about all we did here. All right, so nice little hookup there right before the number. Maybe they anticipated the number was going to be something. Who knows? But you get that kind of volatility when there are numbers around. That's why we always keep telling you about when numbers are released. You never know what. And then we're also behind the eight ball when it comes to information flow. We always are going to find out why a market moved after the market moved. We just have to trade the volatility when it occurs. So keep that in mind when you're trading. So we are sometimes at the mercy of volatility. Again, if anybody has any questions, feel free to ask in the chat. It's always nice to hear myself talk all the time. Much better when I have to answer questions. All right, coming back here to our pivot area, just kind of hanging now. All right. All right, continue down. Obviously, the 74 we already traded that level, so we're not, you could trade it if you're a little aggressive, but we're not, if you're a little bit more risk averse, you're going to not trade that area anymore. You're going to wait for the 63 on the downside. All right, we continue to downtick here. Looking for the 63 area on the downside is our next support level. If anybody has any questions, feel free to ask in the chat. All right, continue to downtick here, looking for the 63 area. A little aggressive, our green blue band in our hourly is right here at 67 if you're a little aggressive. All right, nice little pop there against the 67 area, which is our blue band and our hourly there. If you're a little aggressive, again, everybody here has different ways of trading. Not everybody has to trade the same way. There's obviously some of you who take more opportunities because you're a little bit more aggressive. Nothing wrong with that. You have to understand your risk tolerance and trade it accordingly. So they kind of hiccuped there up to 92, 93 area and then came back off against our, 90, they got up to 02, I should say, on 102, and then against our 98 area and then came flying back down. Hopefully you were able to hang in there with that level. If not, then that's fine. And then we come back down here to bounce off of the 67 area there, which again is the blue band in our hourly. The U.S. may avoid a downturn in part because the data on economic activity is nowhere close to recessionary, said chief economist at Goldman Sachs. GDP grew at 2.6% annualized in the third quarter, while the country added 261,000 jobs last month. Even as financial conditions have tightened, the rise in real income is likely to be stronger force than next year. Unlike other bouts with high inflation, supply chains are normalizing, as will housing rental markets, a source of disinflation that wasn't there during the 1970s. While spending is rotating from goods into services and inventories are rebounding. So Goldman Sachs putting the old, it's not bad, it could be not bad. You know, who knows, right? Who knows what's going to happen? But the bond market is still telling us, even though there's a nice recovery there in the bonds today. Very nice recovery. See what the yield on the 10-year is, roughly about 375. I think they closed at 388, or they were around at 388 not too long ago. All right, come back down here. 63, it's our next support level that we're looking at. We do have construction spending, I think. Yeah, coming out here at top of the hour. See how that works. As we come quickly down here to the 63 area, this doesn't leave us any doubt as to how fast this thing's moving, right? And a quick 2-point rotation there against our 63. Nice little pop there against our opportunity there at 63. And there's our 3-point rotation against our 63 there. Again, depending on what your risk tolerances are, hopefully you're able to hang there with it. I got down to 61.75 and popped back up, so took just a tiny bit of heat there. And a nice little quick rotation against it. All right. All right, the levels seem to be working out pretty good this year for us so far. Can't complain. I know some of you just want no risk whatsoever, but this is commodity trading. You're gonna have to work some of these levels sometimes, unfortunately. But we are getting some quick rotations here as the volatility stays pretty much whipping around. More people are trading. We always talked about last week. We talked about the volatility and how much volume was traded. You know, we were at like 200,000 at this point. This whole week last week, we're at 600,000 right now. Very healthy number, and that's what happens when you get more traders back involved. Everybody's like happy again, trading. Everybody was away, and you get that's why we. As much as we didn't, we were around here last week, and we moved around a lot, but it was very, very thin, and I mentioned that a lot. So, and this is another example of that, as the volume here, 3 times as much at this point than there was last week, and that makes sense. All right, nice little rotation there against our 63 area. Next support level we have is down at the 54. Very, very quick market here this morning, giving us at least we're doing okay, so can't complain. I mean, everybody could complain, I guess. Do we have a number coming out here in about 4 minutes? See how that work plays out. Construction spending coming out here. Let's see, America's government debt in serious trouble. America's debt, national debt, topped 31 trillion for the first time in November, with a number is not getting any lower. The gloomy financial milestone has added to worries about the economic health of the country, and lawmakers may need to pursue policy realism, especially if the recession kicks into high gear. Other factors like an aging U.S. population, elevated healthcare and defense costs, and a tax system that doesn't bring in enough revenue to cover spending are also worrying as the federal government kicks the can down the road. As the market continues to downtick, we're looking at the 54 area next as some support. There's a quick break here off of those highs, right? 50 S&P points in 20 minutes. Roughly. Got down to 56 there and popped back up here a little bit. We have 54. There's no magic number or level when a government debt begins to hurt its economy. The country has easily handled a much heavier debt load than was once thought possible, and even use those conditions to remain competitive on the international stage. Default isn't imminent, and even a divided Congress ultimately finds a way to raise the debt ceiling. Some go a step further and say that the record amount of red ink doesn't matter at all. Instead, focus on the interest of the government pays on all its debt as a percentage of GDP. Well, that's true to some extent, but now that interest rates are higher, that's going to be a little bit of a concern there, but that's another story. All right, we're coming down here to the 54 area. Okay, working this 54 area now. Again, either way, just make sure you keep your stops in place. All right, nice little rotation there against our 54 area. We do have a number coming out here imminently here in less than a minute. So in case you have a position on or don't want to trade during the number, we are giving you that 30-second warning type of thing here. Again, we like to stay flat. So I'll get a nice little quick scalp there against our 54, and now we're flat. We'll let this number kind of dictate where we're going to go next. What a move here. 50 S&P points in about 20 minutes. Who knew? I wish I could have told. I wish if somebody knew that was going to happen, I wish you would have told me. All right, we're flat here. We'll deal with this number, construction spending, and then we'll see what happens from there. Next support level we have is down at 43. Right now, got resistance around our pivot area, but if you're a little aggressive, maybe around the 72 area. All right, numbers out. A little bit of a rotation up here to the upside. Again, if anybody has any questions, feel free to ask in the chat. All right, if you did buy them down there against our 54 area, you did fine. All right. Again, a little resistance right now would be around the 72 area if you're a little aggressive. Otherwise, our pivot there at 83 would be a better resistance area. We like to average about 4 to 5 trades a day, and we obviously have done that pretty easily here this morning. And again, the volatility definitely comes back into the market. I got the movement there with this is what happened. This did not happen last week, only because the volatility wasn't as much. I mean, the volume was not as great, and again, very important to have volume in addition to volatility. Last week we had volatility, but the volume wasn't there to keep some of our areas that we thought would work better for us, but they didn't. And now we're just kind of hanging around here. Again, if anybody has any questions, feel free to ask in the chat. I don't know. I don't know. They made a big move here before the number, so that number was I don't know. There was a big move right there before the number. All right, kind of have a little bit of trouble rotating to the upside now. We'll see what it wants to do. Next support level we have is down here at the 43 area. Let me give you some more levels here underneath. We got 43, then 34, 27, 19, 09, and 3800.